As a financial services company, our job, our mandate is to provide financial solutions, right? So I'm looking and saying, if I can sell a reverse, if I can sell a mortgage investment, if I can sell, other pooled investments, then I should sell them. And if I can make them make sense to my client in a way that, if I can make it make sense in terms of the profits, then there's no reason that they would say no.
Their profits.
Their profit.
Yes, okay. Just
at the end of the day, it's our job to help our clients make more, increase their wealth, however it is that you want to put it. Because otherwise, what are we doing?
Yeah, that's why I don't even like saying sell. Like when it comes to, for me, sell, like, okay, sell. You can sell a car, you can sell an object.
I hate the word sell too, but it's just
like
it's a to the point.
I'm providing you need something.
Yeah.
It's just me identifying what it is you need and finding the
solution.
best fit for your need.
Yes, but look,
because
like I
said,
selling
to me implies I'm giving you something. Maybe you need it, maybe you didn't. Mm-hmm. There's a need here, and we're filling that need.
Correct, but they would have told you what that need was when they called you or they called me, and they said, okay, it's a cash flow problem.
Not always.
Well, then
sometimes
why'd
they
you call
dance around it. Sometimes they don't know the need.
But
they tell you, it's almost like solve this riddle.
100%.
I have this, I have this, I have this, and then you kind of have to figure out what is the need.
But that's why
what is the number one need? Because there might be
Yes.
multiple needs that sometimes you can't solve every problem in one transaction. It might be cash flow is my number one priority.
Yeah.
There might be a few other things, but if this is number one, okay, here's your solution.
But while you're designing that solution for cash flow, I'm also designing a solution to help them actually build their wealth, because there's multiple products and services that you can layer on top.
Sure. This is addressing multiple needs, right?
Correct.
So that's ideal. It's ideal when you can solve, if you have 3 problems and I can solve all 3, fantastic.
Exactly.
Versus in some cases, maybe you can only solve 1 of 3 or 2 of 3.
Correct.
But yes, you're obviously looking down the road and trying to not only solve the bubbling on the surface problem,
most people,
but you're looking 5 years, 10 years down the line, what's your life going to be like, and addressing that need.
Exactly. But isn't that what we should be doing as mortgage professionals?
Hell yes.
Because
you know how I am. I get angry when people are, when I ask like 3 questions to
you
someone in the industry
you're
and
an angry old man.
right away, like they don't know, like I get annoyed. Yes, I'm an old man. As you've told me many times based on the way I dress. I call this look ready for golf at the drop of a hat.
That is for sure true.
All I have to do is change my shoes and I'm on the driving range.
That's it. It's always ready.
But yes, I get angry because I'm an old man who has less patience than ever. But yeah, because if I ask you, you're an agent, let's say, okay, and I ask you 3 or 4 questions about your client, and already by the 3rd question, you don't know. You don't know about your client. Mm-hmm. How can you provide the right fit or solution or even advice, anything? How can you do the right thing by this person? You haven't really taken the time to understand the person.
When the regulators started talking about the KYC, right? When they started pushing, guys, you gotta know your client, you gotta go deep. I always look at it and I, like everybody else, and I say, well, got another form, another change. But after I'm done, sulking for the minute, I always look and say, okay, so how can we benefit from this?
It's not a big deal for you.
No.
Because I know most of your client book, you know them all intimately.
Yes.
For the most part. Now, there might be a new client, a referral or something, and you build that. But for someone who already is doing it, it's okay. It's an extra form.
Yeah.
Big deal. You have the trust of your client. Like they're going to do it for you.
Exactly.
It's for some, it will be a big adjustment and it will be a big pain point. But for the way I always look at it is, we wouldn't even need the regulator to impose this on us if people were just doing it.
But if done right, it provides you opportunity, right? And one of the things that we're going to talk about today is like, business and, a lot of the changing rate environments, people are, I guess, what's the word I'll use? Upset that they're not closing as many deals because interest rates are getting bought down by, by other financial institutions, by some of the banks.
You're showing up to a fight, a gunfight with a knife.
Yeah, there's a problem, right? You're going to lose. But that's because you've built your business in a way that is not, I'm going to say sustainable. Is that the right word? Or maybe not?
Well, it's only sustainable until it's not.
Well, but that's
when you have a lender that's 20, 30 basis points better than everyone else, let's face it, like, you just need the people. Open the door. It's like shooting fish in a barrel, as I sometimes say. But what happens when your rate is not far super? It becomes a lot harder.
It becomes a lot harder, exactly.
So how do you then
pivot
as
I have to.
I love it. I'm not a Friends guy,
reference.
so I have to watch this episode that you're talking about.
We're gonna do it. We're gonna have an Uptown watching Fred's
Friends
episode.
viewing party.
Yeah, Evan's gonna set it up.
I'll pass. I'll be at the driving range working on my fairway woods.
Yeah, but I make the joke, but at the end of the day, it's the truth. You got to be able to pivot. You got to be able to find another way. And I mean, I said this even in the Uptown chat this morning. It's not for me. It wasn't even a pivot. It's that I've always focused on alternative lending and private lending. I always have.
We were chatting the other day about it's okay to specialize.
Yes.
But at the same time, you got to be able to pivot. Like, it's so hard in this industry. You need knowledge.
You need knowledge.
You really need knowledge.
Yes.
Because you can't just tomorrow say, I'm going to focus on just self-employed individuals. Only self-employed individuals. That's going to be my new bread and butter. And then you just put up your open for business sign. You have to understand these people. You have to speak to accountants if you're not a self-employed individual. Even if you are a self-employed individual yourself.
No, you need
to talk to people. You need to understand them. What are their pain points? And then the whole other side, like, now what solutions do you have now that you've understood their pain points and their situation? What solutions do you have? Because you can't just say, come to me, self-employed, self-employed, self-employed. Because people will come, and you need to be
how do you service them?
Ready, confident, knowledgeable. You need to be able to handle it.
Yeah.
So, tough industry. You got to be able to pivot, but at the same time, like, it's okay. Dive in, become the expert in something. There's nothing wrong with that, and there's nothing wrong with not being an expert if something is not your forte. Work with Clyde's an expert in something. There's nothing wrong with me referring one of my clients to Clyde and saying to my client, I would be doing you a disservice if I took on this application for you because that's not my bread and butter. But here's a guy that I trust that can do it. And that's another way that brokers are expanding their
network.
Their network and still providing solutions for their customers, still being out there is working with each other.
Well, and I think I've talked about that one or that point on podcast before, because yes, I mean, part of what we do here at Uptown is, we're a network, right? We're a network of agents and brokers that choose to work together, period. Whether you work with us on the brokerage side or you work with us on the lending side, it doesn't really matter. At the end of the day, we're open for business for all that want to do business with us. And sometimes that might just be picking up the phone and saying, hey, Clyde, I have a question about so-and-so. Have you ever seen this before? That's okay too, because maybe there's going to come a time where I got to pick up the phone and have that conversation with you. But to the point, sometimes that means, hey, Clyde, I have this deal I'm not able to service. Do you have anyone in your network that you can, work with to provide me with funding? And, that's okay too. And vice versa. I mean, when an agent or broker realizes that, like I say many, many times, getting your agent's license is a license to print money. It's up to you to put together all the little pieces of your organization, however big or however small you want it. But you got to put the pieces together. And then the machine starts to turn, right? And for me, taking you back to the point about specialization, I specialize in mortgage services. That's what I specialize in. Whether it's providing a simple mortgage transaction like we can get from, our regular Schedule A banks, or the alternative lending space, some people call it the B space, or the private lending space, or you can carve that piece out into the syndicated mortgage space. There's so many different things, but at the end of the day, they're mortgages. The mortgage is the foundation of the business, and with that gives us the ability to grow and scale. And I know, we both come from banking, and how many times did you hear that the mortgage is the anchor product? How many times did you hear that?
Often, very, very often, and early in my bank career, that was driven home. And then every time a new product would launch and you'd talk strategy, it would come up very often.
Yeah, if you actually understand that as a mortgage agent, you have the opportunity to work with someone on the single biggest financial transaction that they're probably going to make in their life. And then you pair that with all of the know your client information, and you pair that with your own willingness to learn, to go above and beyond, to be able to provide them with additional products or services. Imagine you get that customer, young couple, 28 years old, bought their first house. Maybe, both teachers, who knows, $100-something thousand a year. So you have a household, $250,000, let's just say, just getting started. And you know that they could afford their home. They're probably going to want to set up an RSP, maybe a TFSA. And you're going to help them, or let me change that and say you're going to be part of their financial journey for a very long period of time, so long as you treat them properly.
Ideally, yeah,
yes.
Exactly.
So,
but sorry, I cut you off. A lot of agents or brokers, their first hurdle is they don't think that way.
But that's the problem.
They're transactional. So the agent or broker has the client come in their door and they say, I'm looking for a mortgage because I'm buying my first home. Mm-hmm. And the focus for a lot has been sort of narrow. Mm-hmm. It's this purchase is what I'm going to help you with. And maybe it's also, and then, okay, I'll put you in my calendar for your renewal. And then that's 3 years from now. You know what I mean? I think that's the first hurdle to thinking like an entrepreneur, thinking like you think, is that it's just, you've come to me to purchase the home. So you've already, just in 10 seconds here, we're starting to talk about their income. You understand the position they're in. You're not just looking at, TDSR is in line, so we're good. But you're looking bigger picture. You're understanding their situation. So
because you look at it like this, and they come to you to say, I want to buy a home. So now they're going to qualify. You talked about TDSR. So they qualify, and maybe you're going to buy that home $1 million, right? They purchase the home. That means they need a realtor, yes? And so if they need a realtor, why not either refer or be part of the transaction? And that's the benefit of having a real estate team here at Uptown. Because even though I might refer it to a member of the team to take care of it, they're still a member of the team. They're still part of what we do here.
Yeah, they're just as committed to making sure that client has a good experience as you.
Exactly. So there's a benefit to the organization, and more so to the potential borrower or buyer. So now we have the ability to help them on the real estate end. We help them on the mortgage end. And we also begin to understand the investment and insurance side of the picture. And in time, we will know what that potential TFSA or RSP looks like. And in time, we will know, are they adequately insured? Can we participate in something like that when different pieces of the business come to play? But what we're really doing is positioning ourselves to be part of that financial journey. As the customer's needs grow, the products and services that we could potentially put in front of them also grow. And it's just looking at business a little bit differently, because at the end of the day, yes, they are still mortgage clients, but all I'm doing is stacking or layering various products or services throughout that financial, or what we call the customer life cycle.
Yeah, and I mean, you're very good at showing people how to leverage your equity, how to take advantage. So 28-year-old teachers making 250 combined, as you said, they're first-time home buyers. Very stable industry, hopefully, God willing, no issues with them personally, their health. 5, 6, 7, 8 years down the road, now what? That home that they bought, they've started to pay the mortgage down.
Oh, 100%.
The value of the property's gone up.
Yeah.
Now they've created all this equity, and someone like yourself has built this model here that you know how to show them how they can take advantage of that.
100%. Part of that solution is going to be, you're not going to make just your regular mortgage payments. And majority of my clients know that this is me. You're going to get a mortgage with us. We're going to give you we're going to give you sound financial advice. But part of that financial advice is going to be, I know you could afford that $3,200 mortgage payment. So why don't we say, okay, I know the bank only wants, $2,700. Instead of paying $27,000, I know you could afford $32,000. Let's meet in the middle and say we're going to pay $3,000. So now all of a sudden we've created an extra pay down against their mortgage that ultimately over the next years and years is going to, of course, create a larger equity position. Later down the road is when they're going to benefit from that equity position, when we teach them about leverage. Because we don't walk a first-time home buyer in the door and say, okay, you're going to leverage. No. You have to show that you're...
That would be fun.
No, that's crazy.
They're just watching their head sort of spin and be like, what is this guy talking about?
Right? What we do is not for everyone. That's the start.
And that in itself is, I don't know if a skill is the right word, but I'm not a fan of scripts.
No, I don't do
scripts.
So
you can't just, okay, these are my talking points. And it doesn't matter if, one of your investors who's retired, tons of equity, paid out lots of money in the bank come in, or your first-time home buyer putting 10% down and kind of nervous because they've never done this before.
Yeah.
You cannot present those two individuals the same script, or you can't have the same conversation, and you don't have a product that you can just apply to both of them. They're different.
They're completely different.
So that in itself is a skill, just understanding.
But it's a skill.
In front of you.
It's definitely a skill, but I can simplify that and say, when putting together your mortgage business, did you take the time and actually build what we call personas? So there's various personas, various types of individual personalities, profiles that customers form into. So if you're going to go into the mortgage business, take the time and build a persona, and then look at that persona and say, what are the products or services that this type of persona would need?
Yeah, I like that. I've never heard it said that way. I like that though.
Because when you take it that step, or I should say when you dive a little bit deeper, that's when you can start specializing in that persona, whether it's small business, whether it's, I'm going to say the reverse mortgage product, whether it's first-time home buyer. I mean, the choice is yours at that point, because now even the questions to ask your lenders. People say all the time, I want to talk to my BDM at EQ Bank. Okay, great. I mean, pick up the phone, call Fabio. He'll answer your call. But what are you talking to him about? Well, I want to know what the rates are. Okay, but you don't need him. You don't got to call him for that, right? You want to pick up the phone and be able to say, hey, I'm calling about, this, laneway housing product that you guys should put out. Tell me more about that. Call, the people on the reverse mortgage team and say, hey, Christina, can you tell me about, this piece about the reverse mortgage and how that works very specifically, and how you are different from your competitor? What makes you, if anything, the better product? I don't know.
I always, for me, it's put yourself in the client's shoes. Okay, I'm not of that age yet, even though, as you put it, I dress like an old man, and I'm cranky like an old man. But if I was applying for a reverse mortgage, okay, what do I want to know about the product? Exactly. And I'm even more qualified because I work in the industry. So, you know, the lay person may not even think of the question when they're in that position because they're just not in the industry. I want to know.
Yes.
What are my payment options here? How much can I prepay? Can I make payments on a reverse? How does that work?
Yeah.
What if I break it early?
Yeah.
What are the penalties with your company? Like,
yeah.
So I would want to know these things.
Yeah.
And I would tell someone, pretend it's you. Like, I mean, go to bat for your client as if it's your own family member or your own mortgage.
One of the words or one of the things I say all the time when trying to describe, you know, mortgages and mortgage sales is just make it make sense, you know. And people say, Clyde, you know, you're really good at selling things, or you can, you know, you're really good at talking to clients. And I often laugh like I just did, because all I'm doing, Lou, is making it make sense. That's it. You know, whether I'm making it make sense with the numbers.
So humble. There's more to it than that. Come on.
Well, I mean, yeah, a lot of time, a lot of education, but, you know, it is. It's making it make sense to them. And, you know, I'll talk to you, take a second, I'll tell you about the group that I was talking to earlier. And they came in to talk to me about, you know, making an investment with our asset management division. You know, simple mortgage investment, looking for something, you know, first mortgage. I said, yeah, no problem. Sounds about, you know, what we do here. You
mean they had money and they were looking to invest
Correct,
in something?
Yeah, they had some money that was sitting
safe, potentially a first mortgage.
Correct.
Okay.
Yeah.
Gotcha.
Yeah. And I said, okay, great. You know, sounds about right. You know, that's what we do. We can definitely provide you with that, like everybody else would say, right? Take the sale, right? But if I didn't take the time to go deep, ask the questions, I would have missed the bigger picture. I would have missed the opportunity to understand that they had a minimal mortgage and the cash flow was an issue month to month. They were retired and understood that the money that they had, the equity in their home, was all the money that they had. And if they had to do a regular refinance to take the money and live their life paying for health care, food in this market.
Well, if you're a pensioner, I mean, even just your day-to-day expenses, you're not balling, as the kids say.
You're not.
It's tight.
It's tight. And so now all of a sudden, you're not making what you used to make. You're going to refinance your home to utilize that equity to pay for your lifestyle. Or you're going to take a reverse, invest it, and live on the spread. When you can break that down, show them the benefit, and then also show them an option for actually being able to afford to keep their home in a down market where you don't want to sell right now. If you can buy, I think maybe, but you don't want to sell. So you pull the real estate knowledge into the conversation to help them.
Well, you have multiple facets of knowledge just in this one conversation. Real estate knowledge, you understand mortgage brokering, and then you understand the investment side for this individual. So you've got three different sort of areas that you're pulling from to be able to have a robust conversation there. Is that?
Yes.
I think that's fair to say.
Yes. But that is understanding your industry.
So bringing it back, so I think we wanted to talk today about some trends, and we kind of touched on like renewal rates, or even just rates at the branch. Mortgage agents, mortgage brokers are getting killed.
It's
so
not fun.
Yeah, especially on renewals.
No.
So what advice would you give someone who's just like coming into the office, an agent or broker, and just saying like, business has been slow. I'm experiencing heartbreak, as I call it. You know, you're getting the mortgage approved. You know, client goes into a branch, they just happen to have a conversation, and now they just either undercut the broker, or right now mortgage renewals are huge. They're a huge focus. So you're trying to bring a mortgage from one lender over to another lender because you thought you had a good offer, and then the bank just says, hey, what are they offering you? Boom, and I'll slash it, right? So what would you tell someone who that's what they're feeling? That's their business, that's their focus today, and they're just not they're not riding high right now. What would you say?
I would say, one, I feel your pain, because we're all in it together, right? It just, the only difference is that's not my only business model, right? I don't just focus on lowest rate products. That's not what we do here. And I would say to you, going back to some of the points I made earlier, if you took the time to actually build a true business plan, part of that plan should be, what do I do if, right? So if you build a business around low rate, what do you do if you're no longer the lowest rate?
Yeah, exactly. Yeah. And at some point you won't be.
And you won't be.
These things, these things they come and go. So there'll be times where you're super competitive.
Exactly.
And you're going to be flush with business, but there's going to be times where you're not.
Exactly. So what do you do if? Well, if I'm no longer the lowest rate in town and I only have one product, which is lowest rate, I'm going to have an issue. Fair to say? But if I'm no longer the lowest rate in town and I have another product that I can sell, which is to small business owners, and that group of people, that persona, actually need, I'm going to say, someone that has the next level of knowledge to be able to guide them through, one, how to qualify for a mortgage, not so much what's the lowest rate that you can get me. So their needs are different. It's not about rate. It's about, I want this house, I want this business, I want this commercial space, and I want it at the highest potential yield that I can get with the financing package that you're going to give me.
So you're shifting focus to a different audience or market segment is one of the things you did.
Yes, because the clients that I sit down with, and if anybody knows, we sit down, if we're talking to you about getting a mortgage on your home for whatever the reason, whether you're buying a home because you're increasing your portfolio or you're a first-time buyer, you come in, you want to buy a home. Okay, but why are you buying the home? Why are you buying the home? Why do you buy versus rent? Let's start there. Because there's a lot of people that have the opinion it makes more sense to rent than it does to buy. Do I subscribe? No.
You've been reading the Toronto Star? I told you to stay away from it.
Scary place. But, some people would say, hey, I can rent. I don't have to worry about these things.
They can make an argument.
Yes,
yeah.
right?
I've seen that I joke about the Toronto Star, but I think actually that's where I saw that.
Yeah.
So more cash flow.
Today.
Enjoy my lifestyle.
Today. It's all about today.
But I know I'm getting sidetracked, but I just laugh because I'm like, what is rent going to be in 20 years?
Who knows? That's scary.
Like nobody seems to make that argument. Yes, I'm sacrificing by buying and not renting, of course.
Of course.
But my mortgage payment is here, and as I pay down my mortgage,
Yeah.
It'll be about here. I'll go through some renewal cycles.
Yeah.
It might go up a little bit, go down a little bit, but God willing, if I'm working healthy and I'm able to pay it down, I have this window where I know my costs. They'll go up with inflation and just the cost of living, of course. But to the crowd that's saying just rent, fine. Now, like if home buying is not for you, it's not for you. But when you're making the argument that you should rent over buy, my question is, what is rent going to be in 20 years? Okay, it's $3,000 a month now, and maybe my mortgage payment is $4,000 a month, and with property taxes, whatever, I'm $5,000 a month. But rent in 20 years could be 8,000, could be 10,000. Like, I know these numbers sound crazy, but when you were paying $400 a month in rent, 30 years ago, you probably would have never assumed or thought 3,000 a month. That's nuts. But nuts. Here we are. What is rent going to be anyway? I got sidetracked.
Yeah, but with that being said, I asked the question of, so why are you buying, right? People say, okay, I want to buy a house. Okay, but why are you buying? Let's start there. You're buying a house in order to create wealth, to build equity, and then what? The equity stays there and you leave it there and you die.
That is shifting. Okay, so people are coming to people like yourself, and now they're understanding what you can do. My grandparents' generation, that is what it was.
But this is the problem.
I come here, I work hard, I buy a property, and maybe I pay off the mortgage, and now it's just, the value's just gone up, and for a lot of them, that was the retirement plan. Now I sell, I downsize, my kids are gone, and I live. But that's shifting as well. So now people are ready to have these conversations because they understand that I can't just, like, how do you get ahead in this life? Do I just buy a house,
pay it
work
down,
my fingers to the bone, pay it down, and then I die one day and I hope I can leave my daughter something? Yeah.
And then, what's the cost of, everything then?
By the way, she's going to want to go to dance or do skating, gymnastics, university, maybe?
Yeah.
I think these conversations are way different than they probably were like in our parents' generation.
Yeah, but at the end of the day, whatever the conversations look like in terms of the numbers, they're not that different than the conversations that I'm having now. The only difference is we're showing them to do the things that maybe only a select few were doing versus now we're trying to bring it to a larger audience. And so what we're giving them is information about, yes, you've worked your whole life to create this this equity position where you can now benefit by leveraging that position, which is in simple words means you have worked your whole life to pay down your home. And now you're retiring or you're trying to retire, and you shouldn't have to struggle. With the cost of living today, things are extremely expensive, and it's stopping a lot of people from even thinking about retirement. But when you understand how to leverage the home, mix that with an investment product that can actually pay for the leverage for the mortgage and still give you profit at the end of the month, that's something that you need to maybe take some time to look into, right?
Yeah. And I mean, we started this topic with me asking you, what is your advice for someone out there who's getting killed in the rate game? I think even just the fact that what you're saying in and of itself is advice.
Exactly.
The bank who's just offering a super low renewal rate, are they taking the time to have these conversations? I can tell you firsthand, I see the deals that kind of come through the door with some of our agents. They're not. Yeah. Banks right now, and no disrespect to the bank, there's a lot of good people there, and if a client has an investment advisor, there may be that conversation.
There's some really good investment advisors.
But what's happening at renewal now is they're actually, a lot of them are telling their clients, go speak to a broker. Like if they have the sense that you're shopping, they're going to say, go talk to your mortgage broker. Yeah. Let me know what they give you, and I'll beat it. So it's very like,
but they're
hands off.
They're selling rate. They're not selling value.
Well, But exactly, that's my point here. So how do you even stand a chance? So if that client then comes to you and says, hey, Clyde, I have a renewal at CIBC and they're offering me 4.39 or whatever. Mm-hmm. If your first thing is what term? 3? Okay, I can do 4.29.
Mm-hmm. On a 5-year.
All right, cool. Yeah. Like if that's literally how the conversation starts,
that's not a business.
You are toast.
That's not a business.
I agree.
But that's the difference.
What's happening then is that client then goes back to CIBC and says, my broker can get me 4.29. Mm-hmm. CIBC is like, 4.19 it is.
Well,
and you've done nothing. You know what I mean? I preach, I'm Mr. Cliche, as some people call me around here. Like, don't start your conversation with rate. You don't even know this person. You don't know their situation. You haven't taken the time. And your conversations now, unfortunately, might end with them going somewhere else.
Mm-hmm. Exactly.
Because it might be that you've taken the time to understand their needs. What's your amortization right now? How long have you been paying this mortgage? I'm down to 18 years. Okay, fantastic.
Yeah.
Chipping away. Mm-hmm. You have any other obligations? Any other need to borrow upcoming? What is important to you? Mm-hmm. So you're at 18 years now. You're going to renew with, keep it going with CIBC. You're going to renew with CIBC. Here's the rate. So your payment's going to be about that. How do you feel about that? Can I show you some other options? Potentially. Mm-hmm. And you might exhaust all options and they still might be that client that they're good. They don't need anything, and they might renew, and you might lose that deal.
That's okay.
But guess what? You had no chance of helping this individual if the first thing you said was, here's my rate, here's what I can get you, and you've added no value.
And you've gained nothing because you've given nothing. But here's the difference. In that same conversation where, and you've seen it, I mean, I'm not going to sit here and say I never lose deals. Of course I lose deals like everybody else, right?
If you never lose deals, number one, excuse my language, you're bullshitting.
I'd be Batman.
Or I'd be like, please sell me your secrets. It happens.
I like Batman. Sorry, I had to say it. I don't know. But I lose deals like everybody else.
Of course.
But even when I'm losing a deal, I would have had the opportunity to sit down and have a valuable conversation with my client that's going to allow me to identify various things about them financially that will eventually allow me to pair their needs with one of our products and services. And ultimately, our client will benefit, and we as a business will benefit. And that is how the business is structured. It's mutually beneficial.
I like that, yeah. Like, I'm not a baseball guy, but if you play baseball, you get how many at-bats? You get 4 at-bats, maybe 5 at-bats. 2 non-baseball guys, and I'm using a baseball reference. We didn't think
give me soccer, Luke.
I didn't think this through, obviously. Folks, this is not rehearsed. But my limited knowledge of baseball, you go up for your first at-bat. Yeah. You might strike out. You might totally whiff and strike out. But guess what? You're going to come up again. Yeah. That's sort of the same approach here is don't be so close-minded that this person came to you, you weren't able to provide.
I didn't get a mortgage deal, and now I'm going to cry.
And that's it? Again. Like, that's gone?
No.
Make this person an advocate.
Yes. You know what I do, and you've seen this. I'm not going to tell everybody go out and spend a bunch of money on people that you didn't make any money on. That's not what I'm saying. Okay, I run a profitable business. It's my motto here. Okay, but you took the time, you met with them, you hopefully took the time, asked them a series of questions to help build out that customer profile, and now, like a good advisor, a good mortgage agent or broker should do, I would maybe send them a birthday card.
But even just to have the conversation, what did it take you? 15 minutes instead of 7 minutes?
Yeah.
But you had a robust conversation, and hopefully you're building some sort of a relationship because maybe there's nothing today.
Yes.
But in the future, there may be a time where we will do business together.
No. There will be another time because I'm going to make it so. Because the difference with a mortgage agent, a mortgage broker, and an entrepreneur is I'm going to ensure that my products and services that I have taken the time to acquire knowledge about in order to be able to provide them to the various individuals I meet, I'm going to make sure that I've taken the time to build that customer relationship. And whether it's a birthday card, whether it's a happy holidays, whether it's a, hey, don't forget, you know, your wife's birthday is tomorrow. It's the little things that I will then do to make sure that every time they think about mortgages, about real estate, about investments in mortgages, or really, like I say, about anything that has to do with family, friends, and finance, you're going to call Clyde. And when you do, I'm going to put you in touch with someone in our network, and they're going to help you. But what I'm really doing is making sure that I'm a focal point of what they're doing. And if I'm a focal point of what they're doing, then I'm going to make sure that I have that chance. And when I do, I'm not going to miss next time, because now I've built a relationship that's not about rate. It's about, Lou, we've worked together for how many years now? You know, let me see how I can help. And if you know, if I can help you, I will. Or I might send you back to TD. I might send you back to EQ, because I'm actually here for you. I'm not here for the dollars. The dollars come because we do it the right way. And that's the difference.
So shifting focus a little bit. So what you've just described there is what a lot of successful mortgage brokers, who really that's their bread and butter, mortgage brokering, do today. Mm-hmm. But so you've taken it one step further. We touched on it in the very first podcast episode, the group of companies, yep, and sort of how Uptown works, just high level overview. We did a podcast talking about the GIC offering when, yep, that came in. So I guess my question is, you were sort of doing this as a broker, and a lot of brokers, that's what they do. Yeah. Why did you take? Because there's gray hairs in your chin now. Like I
didn't look like this when I was a broker.
I remember. I've known you for a while. But why did you choose this structure or this model?
Yeah.
You talk about pivoting. You pivoted and you went in this direction.
Yeah. Anybody that knows me knows I like change. And for me, change was evolving from the mortgage broker, salesperson, self-employed individual that was, you know, out there running, gunning, and slinging mortgages, right? I was doing fine, of course. But I wanted more, I guess. And I saw an opportunity. And, you know, the opportunity that I saw was an opportunity to put together a group of companies that actually was geared towards servicing the client, the consumer, and having their needs first.
So was it your clients? Meaning, of course, you obviously have a certain group of clients, and you were noticing,
correct,
like,
well, I mean,
someone else is doing this for,
yeah,
could do this for them,
of course, and I'm,
why not me?
Why not me?
Kind of thing.
Why not me? I mean, one of the biggest things, and you know, when I first really said, okay, like I've been brokering now for, I don't know, I started brokering, I think the plaque behind me says 2007, right? It was a long time, and in 2015. I looked at it and I said, okay, I mean, there's just a better way, you know? If someone wants to buy a house, they always call me first, because that's the way my business is structured. And they say, hey, Clyde, you know, I want to buy a rental property, or I want to buy a bigger home. And I would run the numbers, and I would say, okay, Tony, Mike, Frank, whoever, here's what you qualify for. Go and call your realtor, and they're going to help you find that home. And they would go off and they would call the realtor.
Rookie. That's
right?
A rookie move right there.
They would get them a home, right?
Well, if you're lucky.
If you're lucky.
And you're a good relationship builder, but you know what could happen is that realtor's like, who's Clyde? Never mind Clyde. I got a guy. come to my guy or girl.
I
That could always happen.
I know. It was
So I'm
scary.
sure that was part of.
Yeah, it's about.
That was part of why maybe you said.
Well, I look at it and I say, you know, one, being an entrepreneur means I want to wrap my arms around the client, right? And wrapping my arms around the client means I want to ensure that what's happening in their financial journey, whether it's buying a home, buying a rental property, I want to make sure that they're protected. And I want to make sure that they do get the best rate if that's where their focus is and that's what we need to do in order to get them qualified. I want to make sure that they get the right type of rental property that can get, you know, the most rent. And it might not be the biggest house on the block. It might just be a smaller house in a better neighborhood because it's a rental property. You don't need to buy a house at $1 million if you can buy one at $750 and I can get you more rent. That's a better profit position. And then you pair that profit position with a mortgage, and let's assume you're self-employed. And because I took the time to understand what a self-employed mortgage looks like, you're able to claim less on your tax, meaning you're pulling less from your business, which means more cash flow in your business. And you're able to still buy this home. It's a very different client conversation, Lou.
Well, think about your typical transaction for someone in that scenario when they're buying. Either they're going to speak to their mortgage person first or their realtor first. But their realtor might send you to a mortgage person because they want to know how much you can afford. The mortgage person, rookie or at a bank where they can only sell you a certain product or they know their program that you fit into. How many times have you heard a self-employed person say, I was told I need to pay myself or show or whatever verbiage they use. I was told I need to pay myself $200,000 a year for the next couple of years if I intend to buy. And you're sitting there like,
what?
Whoa, hold on a second here.
Yeah, imagine you're going to pull $400,000 out of your business over the course of the next 2 years so that you can qualify to buy a home in the area that you want to live. Wow. I mean, hopefully you have it. Hopefully you're making that much.
Well, but I think the point is like understanding the different aspects of the business, understanding what it takes to qualify for a mortgage, understanding what that does to your purchasing power, can have a different conversation and maybe save this individual thousands of dollars. Because I can tell you, I've worked at the bank, seen many mortgage specialists. They equate rate to savings.
No.
So pay yourself $200,000 a year personally. Today you're only paying yourself, what, I don't know, 50. Okay. But now you are 1% better on your rate, potentially. So your payment's going to be a little bit lower. What are you paying CRA?
You got to pay the CRA. It's, I don't even remember off the top of my head. Let's just call it 50%. It's 40 something, right? You're going to pay them whatever that looks like in terms of taxes.
To buy the same house.
To buy the same house.
What savings?
There is no savings. What are you talking about savings? You want to talk
and it's
about
not
savings?
That they're misleading the. But
no,
it's like
they don't understand.
Only know this is available. I don't know that's available. So
exactly.
You want this? This is what's needed.
Yes. The difference is we are a mortgage brokerage. Why did I decide to do more? I decided to do more because I wanted more products and services to be able to sell my network, to service my network. Because when one of my friends, family members, business associates, when they picked up the phone and called me, I needed to be able to help them, but truly help them. Not just sell them, TD mortgage at 4.434, whatever it is. No, it's, hey, Mike, you know what? You don't need to pay yourself $200,000. Why don't you pay yourself, I don't know, $75,000, and we can show them bank statements for the last 12 months to show exactly what you made. They can see profitability. You have no outstanding taxes, and you can go out and buy this house. That's a decent position because here now you have a real calculated savings against what you're not having to claim on the taxes, and the interest rate no longer matters because maybe it's a little bit higher. But at the end of the day, it doesn't affect.
But this is why you're not in the rate game.
I know.
Right? Because you do this for one person. Now, they're coming back to you.
Of course.
Okay, they're referring. Okay, so you're growing and you're growing and you're growing.
I'm growing my network.
That you're not. I see you day to day. I've never heard you on the phone saying, like, pounding on your head saying, "What did this bank offer you?"
No,
like I've never seen that ever.
That doesn't happen.
Like I swear, whoever's listening or watching, swear to God, I've never.
No, I don't sell rates.
You don't.
I don't even know what the rates are half the time.
Gonna say,
can I be honest? I'm the worst guy.
Say it, but
I'm
like
the worst guy to ask
sometimes
the rates.
You're like, what are rates now? Like, because it's second.
It's second.
It doesn't mean you're getting a bad deal.
No.
It just means it's not the primary focus of your business.
It's not. Rate is never my primary focus. The rate is the byproduct of everything else that we've put together. But what we've actually put together is a financial plan for you or your family or your business. And from there, we will decide what the rate is that we need to insert in order for you to be able to acquire the asset that will ultimately help you along your financial journey. And 3 years, 5 years, heck, might be 10 years down the road, we're going to teach you how to leverage that. And we're going to show you how leveraging can then help you really grow your wealth.
So shift your focus, diversify, become an expert, become knowledgeable. The marketing side as well. I know you do a lot of getting out to your network. So you have these programs. You have everything at your fingertips. Sometimes agents just need to get out there. What else? Am I missing anything else as far as what would you tell someone right now that's looking for different ways?
Over and above having various options, you need to ensure that you take the time and go deep on what you're able to offer various clients, because there's always going to be opportunities, right? And maybe I can say that a different way. Having a better client conversation will allow you to have a better client experience, what's the word I'll use? Client relationship, I guess, moving forward. And ultimately that'll help your business.
Partner up.
Oh, well.
Mentors, right? Like, if I see you're doing it really well, especially at the same brokerage, what's the harm to say, Clyde, show me how you're doing this? I'd love to know how to take my game to that level.
Yeah, of course. I mean, I say it to everyone, and sometimes they call and sometimes they don't. But, my door's open, right? Send us a note, give me a call. I'm happy to help, whether you're with us or not.
I find that most people who are successful, they have that attitude. I think a lot of people, when they're on the flip side, when they're the one that wants to do the reach out, there's always like that hesitation where it's like, I don't know, that guy's busy. Like he's gonna tell me to get lost.
Listen, I'll tell you.
That's not the case.
I'll tell you, like, I was like that, okay? But when I joined DLC,
told people to get lost?
No.
Or you thought that's what they would tell you?
I thought that what people would tell me to get lost, right? And then, when I made the switch and I jumped over here to DLC, I took the fear and I put it in the closet. And, I said, I'm going to be the guy that I want to be. And that's the guy that's not afraid to pick up the phone. And that's the guy that's, willing to, I don't know, shake things up a little bit. And, but
it's not just you. Like I find that most successful people are like that.
Yeah. We just got to decide though.
It's wild. It's the opposite of what you would think. So there's that natural, like, but they're busy. Like they're out there doing their thing. Like they don't want to talk to me. I'm just going to slow them down. It's actually the opposite I find with most.
No, because the good ones, like a real leader will stop to have a conversation. Why? Because I just told you that their title was. They're a leader. A true leader is there to help you grow. A true leader is there to support you, to guide you, to educate you. And for myself, I look at it and I say, any of my agents, my brokers, or any brokers or agents that are in the industry that have a question, hey, reach out. We're here. If we can help, great, no problem. Just like myself, I'm happy to, and I feel no ways about picking up the phone and reaching out to Eddie at DLC or Joe or whoever if I need help, because that's why they're there.
Yeah, and we're lucky. The people at DLC they all seem to be, the ones that I've had interactions with are all in that same mold where they're busy.
Yeah,
Some
very
of
busy.
Their titles, they're up here, but they will take the time.
Yeah, they take the time. They help where required, and so you follow the lead, and at the same time you got to be willing to make the change. And as I said, I kind of just decided I'm going to make the change. I'm going to be the one to reach out, and I'm going to make myself available. And, you got to be willing to give if you want to receive. And so, I guess this is my way of giving.
Well said.
So I think that's it for this one. I think we've gone long.
I was just wondering. I don't, I judge it by either my watch, which I'm not wearing today, or how badly I have to use the washroom. And
why are we talking about this?
And we're getting there, so that must mean we've run long.
Yeah. So yeah, we'll park this one on Louis' bowel movement. That's disgusting.
Oh.
So with that, Uptown experts, we're out.